Okay, what's going on? Good evening. Good evening. Today is Monday, the 14th, July the 14th, 2025. And what we're going to be looking at today is the DRC, right? The Daily Trader Review. Also, if you haven't looked in the Telegram, there is the weekly review template so that you can go over the EOWs as well with me and kind of have an idea of like what I'm actually looking off of. And then as well, when you go into Telegram today, there should be a daily recap, which should look like this. All right. All right. Looks kind of like this. If you guys can kind of see it. So that way you guys can follow along with what I actually do, personally, like I said here, what I actually write and stuff like that comes from this sheet here. Right. So after this quarter, my goal is to move to only doing this on TradeZella and typing all of it just because I've been writing it for so long. Okay, so today what we're gonna focus on is we're gonna focus on the pre-snap read is what I call it, the pre-market read. I'm a football player, so I call it a pre-snap read. Um, and then that way we kind of see what audibles and things that we need to work with going into that New York session that we actually play, so our game that we play. And so today was really, really nice. I'm gonna pull up the charts here and go into the H1s and the H4, and then I'm gonna show I want to show you guys what I was really looking at on the daily here. So, like I said, though, really quick, make sure you have this document when you guys come to do this, so you can start getting an idea of the structure of how I lay out the day. Okay, and so okay, cool. So let me move this here really quick too. Okay, make sure you guys can see all this. Okay, so for me, let's just stick with the overall futures market today. I won't really go that much over dollar, but I'm going to stick with what I was looking at coming into this. Now it is a little distorted because we have the new open here and price just went crazy, right? Which we expected. We were looking for these levels. We already had these levels marked as levels of potential, right? And we did go up and reach and make all-time highs on ES in this overnight, which is cool. So what were we looking at yesterday though? Why was I so excited about this type of play? It's because that a lot of times they trap players, right? So when I came into NQ that morning, what I like to look at is all the time frames, right? And understanding like what we were going to get. And before yesterday, what we essentially had on a daily time frame was this, right? You didn't have anything. We were looking for price to possibly slip down, like it did today, into that demand, and then maybe respond on daily, or we were going to technically, right, break down and start making lower pricing. And so since we didn't, obviously we didn't break today, and we took that we took the we've seen the buys, get taken up off that 22,900 area. What I was looking for coming into New York was how the 4 hour candle played, right? Because you actually had the 4 hour candle was already a bullish candle before New York, right? So this is what, coming into New York, this is what we've seen in our overnight, right? We've seen buyers stepping in the overnight. And so I was like, oh, this is going to be pretty interesting. And I'll kind of go over that price on smaller time frames here in a second. But what they did was they made a double bottom, right? So for my smart money traders, of course, when we see that, we're like, wow, most likely at New York, we'll probably be able to find a short down to take that. So that you can kind of see how this is starting to build, right? Of what we were wanting to see. And so then you go into, like I said, you go into a 1 hour and a 15 here, right? To really kind of like break down that price. Make sure we get out of the replay mode, right? We come into that 1 hour and 15, and what you start to see is, the overnight price. So, right, like when I came into the overnight price from yesterday for Monday, what you got to notice is where that daily open was, right? That daily open, it says market open for me. So, like my Monday is my market open, right? From the Sunday open. So, that market open was here. So, the market moves in four phases, right? Accumulation, distribution, markup, and markdown. And overnight, they had already accumulated prices. But what they did was they trapped individuals to see this, right? The double bottom. But what I personally pay attention to is candle closures, right? I love to see candle closures in my favor. So like you have open and then you had a sign of strength candle here, right? And this is all in the overnight, right? Showing signs of strength moving higher. And then that's when you know for me personally that the demand was set. So there was two options that when we came into New York, right? I personally wanted to see if we could sell down like this essentially, right? There in New York, deliver this liquidity and then do what we did today. But as we were coming into New York, this is what we were actually getting, right? As we had that sign of strength here on 15 and 5. And so buyers had already really essentially stepped in. And then what they did at that New York was this would have been here like 4:30. You have 6:15. I don't really look at the charts until 7 a.m. my time to kind of see what price action is delivering. And so 6:30, I'm not really looking. 6:45, not really looking. Now here 7 a.m. So I like to see how people play like 7:30 news and stuff like that. And we were getting another sign of strength higher already, right? Now I play supply demand, guys. Like that's just really how I play. I like to use swing lows and swing highs of Fibonacci retracement. So like something like from here to here, right? When the price had made a high here, I'd be looking for specific things inside that range, right? Because I play inter-range. And so, like I said, after you're getting that sign of strength here, the demand was set, and then it would have looked like this essentially going into New York. You know, like you would have had 7 to 8 a.m. would have looked just like this. So they were already showing signs of strength inside the demand, right? And drawing in players more and more. Okay. Now, what happened for me at New York, why I said I wanted to post this was because it was pretty classic. You know, what I wanted to see when you see if you guys follow me on Instagram or like I said in the Telegram, I wanted to see a push down into that 1 hour demand, right? A draw on liquidity, and then price rally back up, right? But right, sometimes when you're in the moment and things are moving and grooving, right? You see your edge and you're telling yourself don't act act on your edge without reservation or hesitation, things kind of changed. So when we got to New York, right, we had a 5 and we had a 15. I was kind of show this and I'll show the smaller time frames of this, okay? And so for what happened for me, right, and I'll explain why I flipped my bias and ended up buying back into the trend to go higher, right? And so what happened for me right at that New York Open, so I'm actually going to show it on a 5 and 1 minute. But really quick, just remember what we were focused on was if we were going to sell down at New York Open, right? We were wanting to sell down to here. So essentially, like imagine you're looking at the price here, right? And this would have been right at New York Open. And then when price went bearish, we had one candle. And then like let's say that next candle, right? I personally, like just to kind of walk you guys through what I did personally, in that second candle, I started selling the market and putting my stop at the high, right? Like I was wanting to see that fall here. So what I want to do is I want to show that though with a 1 minute time frame so you can get an idea of what it looked like. All right, so we have the 5 minute. All right, and then we'll go to 1 minute here. Right, because it was such a fast move, right? And I was looking at Twitter, I was looking at all this stuff. Like it was such a fast move that it really didn't even give shorts that much time to cover unless you were very aggressive at the structure break. Okay. And so for me, what I seen at New York Open was, of course, I wanted to see this buy work out, but I really wanted to see it below just to make sure we're kind of referencing the prices again, right? On 15 and 5 and higher, is I wanted to see the sweep of 22,800, right? But like I said, coming into this, we had 8:30 open was here, so 8:30 to 8:35. What they do right here, I don't play the 1 minute, guys. Like I look for certain things after certain candles print. So like we had one sign of strength on the 5 minute. In that second candle, I'm looking for 1 minute mitigations to the downside, right? To frame up. So one sign of weakness right at the open, cool. I'm locked in. That second candle, right? 8:35 to 8:40 started to print on the 1 minute a mitigation play, right? Because it started to fake people out, fast up candle above New York Open, weakness candle here, 37, weakness candle here, 38. So I started to enter above New York Open, putting my risk right here, right? And so that's what I was wanting to see. All I wanted to see on this setup, right, was entering here, is I think in probabilities. So I have three sets of probability setups I like to see. If I'm entering here, right, with risk right here, that fit my game. 20 for 60, 1 to 3, right? Doesn't matter what volume you have on the trade, right? So I was just wanting to see price go from here, right, to break technically structure here. That's all I'm looking for it to do, right? And so what happened for me today, because I have trailing risk rules, right? When price capitulated at New York Open, this is a play that draws people in. Now, usually I'm on the flip side of this. Usually I'm like, yeah, man, that's the noob play, right? But in this situation today, edge is edge, right? I really truly believe that like some people can see certain things and some people can't, right? Because they also don't manage the position a specific way. So today I've seen this as a potential, right? Now, when price capitulated and made the lower low, so you had plenty of time, 8:40, right? So in the first 15 minutes, 8:40 to 8:45, price closed lower low. So you had right here, this is what you're looking at this point, right? As a seller, right? I promise you guys, there's not people that are buying this setup that like right here very much to play this back up, right? And if they do, I'll show you guys kind of where I bought it because most people, think about it being a Monday, right? Most people are going to be impulsive. They're ready to trade. Like we're all traders. We're all have our own ways, right? And so that's essentially what you're seeing here today is right is most people don't have when they see that break of structure, right, they don't do anything with their risk, right? They don't trail anything down. They don't have like a two contract system. But for me, like I said, when I see something like this, I'm looking on smaller time frames for specific things at the breakout areas. So we had this candle that printed 43 to 44 and then 44 to 45, right? When that printed, I had moved risk down and had one other contract break even, right? So I had two contracts on the board at that sell. Price capitulated in my favor, right? Doing exactly what I really wanted it to do, right? And it still wasn't going to deliver the objective low, but did exactly what we wanted. Trailed risk down on one, went break even on the other. So basically, in that next minute, right? In that next 5 minutes, this was the craziest part about it. Is most people like what I like to look for, and if price shorts is it to come back up and do something like this, right? And so this is why I say you have to wait for the sign of strength because you can't just start buying inside of here thinking it's going to go higher. Because price, this is exactly what we look for on mitigation shorts: is price to return back to supply after making a lower low, so that we could take that to the downside, right? Unless price is bullish, then it's going to do specific things on the 15 and 5 in that area. And so that's what we got. Price, came back, and I was still good on this trade, right? Even with the push back up that fast on a 5 minute, I was good because I had two contract system. One of those, right, came back, knocked me out for a small profit. The other one ended up eventually coming back and hitting me break even. Now, this is why I said, right, the only person that's taking this buy here is the individuals who didn't find the shorts, right? So it's kind of like a hit or miss type of situation day for people. You know what I mean? If they don't like, if they're new, especially, right? Because if they're new and they missed that short, then they definitely took this buy today and they're feeling crazy amazing about buying. You know what I mean? And so that's how we played the short down, right? And now this is why I want you guys to understand how I can make sense of why people wait for the sign of strength on the 5 minute before they buy up. Now, for me, like I said, this candle right here, this would have been 47 to 48, comes and takes one of those out. The rest of the order went basically like this, and just so you can understand, break even, right? Bam. That's how the sell played out. Now, when the sell actually came back, so I want to show this, right, to the break even on the remainder of what we had on the trade, right? That was when price looked like this. So I'm going to go to 5 here. Do I want to do 5 or 15? How do I want to do this? Let's do 5 here and 1 minute here, right? Because what it looked like here now was very difficult for people, and this is why you got to wait for confirmations of higher pricing. Otherwise, you're guessing, and there's no other way around it. So for me, price had come back and knocked that part of the short out. Price had come back around 850 to 855 back into the 5 minute supply, taking out our break evens almost, right? So this would have been like right here. We ended up getting in, like my entry was like right in here. So it ended up coming back for my break even at around whatever this time was right here, 9 to 9:05. Boom, it comes up again. And it was 9:05 to 9:10. So whenever 9:10, like this candle right here, price came and got my short out, right? Cool. That's cool, right? I had made a small profit on the day and everything was still cool. But I want you guys to understand price action on a 5 minute, okay? So this closure higher was that sign of strength as well, which kind of showed me like, wow, they're going to come back for my break evens. The next candle came back pretty much for my break even on the shorts. Cool. Now what I waited for was price to what? Close higher, making a new high on day, showing willingness to go higher. And then what did that set up, guys? A demand play, right? I don't know about what people call inversions and gaps and all that other stuff, guys. It's supply demand, right? The demand candle is here. Price technically, it's easy to see. It closes higher, it pulls back, right? You're getting a demand play. Now, here's another thing as well. The last 15 and first 15 minutes of the hour are the best plays. The other thing I was always taught was to identify the New York Opens and play below in bullish conditions and play above in bearish, right? And so we were clearly like, I don't look at a 1 minute as much, but it wasn't hard to see, right? I didn't need to frame up a 1 minute to get the same edge. I needed to wait for this 5 minute candle to reach back into demand, slow correction, right? And then I had the opportunity to look at that low because I know a lot of people were looking at what low should I choose for the stop? What low should I choose for the stop? You have to choose the edge, right? Choose this low here or choose this low here. I personally chose this one. Why? Because I think in probabilities, right? I go 20 for 60 a lot of the times on setups and look and can identify 1 to 3 setups inside supply demand, right? And then once price delivers the area that I like, something like this, right? This is how I ended up playing my buy. So I didn't just buy the position in here because here's why I didn't just buy the position in here, right? Because then that person that just does that, I've taken thousands of trades, guys. Like if you buy this position in here, right, thinking you're gonna be able to play this and you're playing like 1 minute areas like this, you're gonna get ran out. Look, right? Why did they deliver the new high and price ran out? Because buyers are taking profit, right? Buyers are taking profit at those old highs, which makes the market relieve, right? And so what I'm basically showing you guys here is wait. You know, you've got that, get the slow correction back into the demand area. And then, like I said, then you can start to frame up edge. You really don't need to go crazy on the 1 minute. It's going to show up the same, that the edge is going to be the same no matter what. So let's say you're playing right in here inside this down candle, right? You can look at the 1 minute, right? For the same edges, they're not going to change. They're the same, right? So 26, and then this was about a 22, and then this one would have made about a 18. So I like to do if I put on, a good size on a trade, it's going to be a 20 point risk. That's like a B plus setup, a 10 to the edge, right? A plus setup to me would be about a 10 point risk to the then when I and then to the break of structure, right? So like I'm looking to frame up a 1 to 2, 1 to 3, and what I'm basically seeing is how much of that edge am I able to capture, right? Because if it's a 20 point risk with the edge, good. That's a pretty good setup just to get to here, right? Where you can start to pay yourself. And we'll talk more about, like I said, more about trailing risk rules once price breaks structure and goes in your favor. But this was, I thought, the safest, EMP is what I call it, easy money play of the day, right? Where you had the best setup to, a 20 for 60, right? To scale into the trade and price had, completely or had definitely shown you signs of strength and willingness to go higher, right? And you were able to probably, if you did this the right way, you were able to short down and understand that, like, okay, you're not going to get that objective low that everybody wants in the 15.5, 1 hour, right? You're not going to get that objective low. You're not going to get that double bottom low. So as soon as you see those shorts covering, right? Like I said, there's not going to be a lot of individuals that take that trade down here below market open on a 1 minute. There are some people that will do it. And when they do it, like I said, they're still going to take the trade like here, right? So it's going to be already in the push up, which isn't bad. I mean, it's just more impulsive, right? But if you can be patient, you can wait for more setups like this one, like I said, in that 5 minute, and that's going to give you a lot more R&R, and you don't have to guess on your risk, right? You don't have to guess at all. Now, like I said, that's pretty much what I played today. Like I said, shorts down, covered, trailed some risk down that's on that quick fall. went break even on the other, price ran back up, took it out break even, waited for the 5 minute shift in price delivery, waited for price to pull back below New York Open, and framed up 15 5 minute edge to extend up to 23,000. And then as we continued to move that trade to the upside, what I was able to do was a lot of people were looking at this and they were thinking that this was Friday's highs, right? But let me kind of bring this back, okay? Because this was Friday's highs. Obviously, guys, this is 1700 hours. This is where the candle started for Friday, right? So this 23,050 was the actual area. Now let's talk about this very quickly here, really quick, because this has a lot of context into obviously today. On that on at 6 p.m. on Thursday night, going into Friday, right? Price capitulated and fell lower than that low of that day, right? Of that previous day from that Wednesday, right? Immediately. Why do I say this matters? Well, because me personally, on this day, I actually put after the 15-minute sign of strength. So it looked like this here. After the 15-minute sign of strength, we were on an actual call, me and Tate, and we started to buy this position, right? Price made money available, right? And made a new high. And I trailed risk here and went to sleep that night, right? This was here in Central Time Zone, Dallas. Now, price ended up going up, right? Overnight around like 1:15, and then started to break down around like 2 a.m. So the London Open was here. Price started to break back down. But what did it break back down into, right? It never broke this low. It never broke Friday's low, right? And so price came into that New York, and how were we able to find those Friday buys, right? Because we knew that they never broke that objective low and they had set that low overnight, being very manipulative, right? And then they had an intern high on day. So what did we do on Friday? We ran that intern high on day, which was fire. And then if you think about where that daily open was, I always talk about giving back positions and specific areas. So we ended up, buy low, sell high. We bought low, we sold high because that was daily open. We sold at the high of day, right? So now think about how many people were still available, right, from Friday's high. And then fast forward to today, right? Look what they did on the market open. They gapped down, destroying buyers inside the accumulation, right? They dragged price out overnight sideways. They finally popped up at London Open, showing signs of strength, closing higher, right? And they did the same thing. They're just working people inside of absorption plays, right? So why do we be looking for the delivery of previous day highs, a typical target for us, right? Previous day highs, 23,050, because they were still available, right? So I hope that makes sense. I hope that helps out with the understanding and the breakdown, the short down, and then to cover that position and then to wait for that sign of strength to find edge, right? And probabilities to the upside, right? So one last thing I wanted to kind of go over. I'm not going to go over Bitcoin or QQQ and all that right now. Um, I'm not going to go over ES as much today either. Other than the fact, like I said, what we were looking for just in general was those H1 demands had set. You guys see that at midnight, right? On all three of these assets, right? And they were already closing higher before New York session even started. So this is a bullish continuation day, right? To take out, like I said, that previous day high of Friday. This wasn't the previous day high. This was the previous day high. And it kind of almost got me too, right? When I took that, buy, right, to after I seen that, I needed to switch my bias here after that close higher and then it pulls back here and I buy in this area here. That's what I had to realize. Like once we got to here, right, we started showing signs of weakness. So we came up, we delivered it, kind of showed some weakness. Came up, delivered it, kind of showed some weakness, but we started setting demand. And then when price made the new high from 11:45 into 12, kind of like when individuals start streaming, like John, different people, right? I started to see down candles in the uptrending market where I could start to taper this risk off. So what did I tell people in the chats? I told people trail your risk to 22,984. And from that moment until we delivered liquidity, if you guys see that, we never delivered back below that level of that edge, right? All we did was make new highs, higher low, new high, right? Delivery, right? So we'll talk more about how to trail your risk in a bullish market, what to look for on a 15.5 in 1 minute, and then vice versa in the short side, what to do. And a lot of times when it comes to the markets that I trade, shorts are short-lived, so it's going to be a lot faster when you're managing those trades. So hope this helped out with just the recap of the day. Um, I would say for me on the grade of the day, this was actually more of a still of a C day, right? Because I wanted to play the capitulation bounce play, and they wouldn't have even given me that type of setup today on a 5 minute because of how this responded after the liquidity grab. There wasn't really the typical what we look for to play it. They made you wait for a sign of strength and then the slow correction back and for you to define an edge. So I thought that was like one of the key things of the day. Let me see what else I wrote down. Yeah, I think that was the key thing of the day. It's just understanding that how they had that engineered that previous Friday high and how they started off Friday at 6 p.m. and just ran the price. And it'll be interesting to see, kind of going forward into tomorrow, how we're already getting the very same thing, right? So we'll kind of look forward here into the future and then we'll hop off here. But I hope that context kind of helps understanding because I like to look at it and get a feel of what we're seeing. So 1700. Okay, so just already seeing, I mean, they blasted what 23,000 up to 23,173. So over 173 handles already taking last week's high and making all-time highs, right? So we'll see what we get tomorrow. We do have that liquidity that still could be a target, right? When you look at this, for coming going forward throughout this week. But like I said, again, we did have a nice daily candle that had printed off of that demand, showing more signs of strength. And until we really stop, doing that, I'll be pretty locked in. So I don't really have much more for what we could see. That just kind of follows up on, the Friday price and then going into the H1 absorption plays and the sells at New York into those and understanding, how to see those shorts covering inside demand plays. So yeah, I hope you guys hope this was like helpful in some kind of way. Let me know if there's anything else I can help you guys with, and have a good rest of your night. We will be trading live in the Discord. Here, I will let you guys know in the Discord, but then again, like I said, you can always go to my Telegram now to get the DRC template. Okay, second, 1 second here. Okay, cool. So remember, this is the template. You guys should have the weekly one. This is going to be the one that you want to have. Okay, cool. Well, with that being said, you guys have a good rest of your night. Peace.